Hi there. I'm Darrell. I'm one of the managing directors here in Calgary for RBC's Energy Group, and pleased to chair this panel on scaling low carbon molecules. We've got 4 very different companies here in terms of size and scale, and really happy to have these 4 speakers with us today. Maybe just at the outset here, we'll get each person to sort of walk through the company they're from, what their strategy around low carbon molecules is, and what sorts of areas you're looking at today. And so maybe directly to my left here, Nico Pattera, the president of Linde Canada.
Yes. Hello, everyone. My name is Nico Pattera. I work for Linde. We're not producing chocolates. That's sometimes confused with Linde. Our company is called Linde. We are an industrial gas and engineering company. And we're producing atmospheric gases like oxygen, nitrogen, and argon. But besides that, we also have a leading position across the entire clean hydrogen value chain. And we're helping our customers to decarbonize by offering them carbon capture solutions or hydrogen technologies. Here in Canada, we have roughly 2,000 employees. And we've just recently announced that we are investing 2 billion Canadian dollars for our customer Dow in Alberta to supply their ethylene cracker with clean hydrogen. And up on completion in 2028, this will actually be the largest clean hydrogen facility in Canada and one of the largest in the world, so that's pretty exciting. Thank you very much for having me today.
Sounds super exciting. Next to Nico is Kelly Campbell, Director of Environmental Solutions at Suncor.
Environmental Commodities at Suncor. So for those of you that aren't familiar with Suncor, we have a very large display out in the lobby showing the range of activities that we do across Canada. We're a large integrated energy company. We have oil sands, both mining and in situ production. We have 4 refineries in Canada and in the US, in Edmonton, Sarnia, Montreal, and Commerce City. And we have 1,800 retail and wholesale stations where we provide both fossil and low carbon fuels to our customers. We've been involved in the low carbon space for decades through a variety of different avenues. Currently, we are quite focused on reducing the emissions from our upstream operations. We've also looked at a whole range of activities in our downstream, looking at renewable fuels, hydrogen, et cetera. Some notable things that we've done: we operate the largest ethanol plant in Canada. We are a co-founding investor in LanzaJet, which is a ethanol to SAF technology. And we are currently building the largest green hydrogen electrolyzer in North America through our Varennes carbon recycling project.
Thanks, Kelly. Rob Pinchuk, Director at Parkland and works out in Burnaby.
Yeah, I never know if people know Parkland, but it's a company headquartered here in Calgary, 6,000 people across Canada, US, and in the Caribbean, primarily fuel distribution, fuel sales, retail stations, but owns 1 refinery out in the Vancouver area. And that's primarily where I work, and I think primarily why I'm here. So in BC, we produce actually 98% of the biofuels in Canada. And I think that's because of the regulatory environment in BC and also the incentives environment in BC. I think the government there has done a great job of driving that industry forward. At Parkland, we took a bit of a creative approach on biofuels production. We actually took the refinery and converted it to biofeed. So we're running the refinery on some crude oil, but also on beef fat and chicken fat and canola oil, and also some waste products from the pulp industry in BC. And that's called co-processing, where you run some crude and also some biofeeds. We've been producing renewable fuels there for 7 years now, so renewable diesel, but also quite a bit of renewable gasoline, which is quite unique in North America. We just made our first batch of sustainable aviation fuel, and that went to the airport and went into planes. Those fuels are all in vehicles already in the Vancouver area. We think we're a world leader, actually, in this new technology, quite proud of it, but also quite interesting in that we are developing it ourselves and working on an operating plant. So new technology development on an operating refinery. So.
Perfect. Thanks, Rob. And at the opposite end of the spectrum, Erin Bobicki, a co-founder and chief technology officer at Aurora Hydrogen.
Yes, so Can you hear me? Aurora Hydrogen, we're an Edmonton-based startup focused on commercializing a technology developed by myself and a co-founder to make low-cost, low-carbon distributed hydrogen. It's a methane pyrolysis technology. We are quite a young company. We're quite a small company. We founded in 2021. We did a venture capital raise in 2022. We raised $10 million from Energy Innovation Capital, Shell, Chevron, and Williams. The purpose of that fundraise was to scale the technology. So at that time, we had a functioning bench scale prototype, and we've been working the last 2 years on engineering a 200 kilogram per day pilot plant that is currently under construction at Sherritt Technologies in Fort Saskatchewan, Alberta. So we plan to have that up and running in the next couple of months. We'll be producing our first clean molecules. And so very, very exciting times ahead.
Great. The last couple of years have definitely been very volatile in the renewable fuel space. And we spoke about this on our briefing call, both in Canada and the States. And clearly, government incentives have driven a material amount of supply into the market in a number of low carbon products, and pricing's been really volatile. Nico, I mean, for Linde, I mean, obviously the focus here in the near term is around the Dow project, a couple $2 billion. That is a landmark project, obviously, for this province. What made Canada and Alberta specifically the market that Linde looked at and said, this is the place we want to invest?
So I think it's fair to say that we followed our customer, right? Our customer has that ethylene cracker there, and but the question is why are they choosing to decarbonize it in Canada and specifically in Alberta? And I think, as said, we are investing $2 billion. That's also the largest investment we have ever done in our more than 100-year history as Linde. It will, once it's operational, supply 25% of the hydrogen which is currently produced in Canada. So it's a significant project. It's huge. It's first of a kind. I think that's what you call it, and therefore it's very complex, right? And that requires committed partners, not only from the industry but also from the government. And I think when you look at what support we're getting from the government on the provincial and the federal level, I think this was one of the reasons, I guess also why Dow has selected their asset in Alberta to decarbonize, because that is one of the main drivers of making this investment competitive. On the one hand side, the federal incentives, on the other side, the provincial incentives. But then in addition to that, you have a very low cost of natural gas in Alberta. And I think if you pair that, the incentives together with the low cost natural resources in form of natural gas, that has made Alberta the perfect region to invest.
Just hitting on first-of-a-kind projects. Erin, you've obviously got a first-of-a-kind project going as well, distributed hydrogen. You know, from the government policy perspective, are those incentives big enough from a first-of-a-kind project perspective to get projects across the line?
Specifically projects, I think in the briefing notes we talked about projects as well as companies. So I can speak about like the policy and projects and getting companies, you know, to be profitable. And there's kind of two separate things there, I think. So, I mean, I will echo what Nico said about the funding environment in Canada and Alberta. It's extremely attractive for particularly international investors. So for a startup, a hard tech startup, you need a lot of cash. Where is that money coming from? A lot of it's coming from the US, for example. They're very attracted to coming here because we have such a favorable non-dilutive funding environment. So for us at Aurora, we raised the $10 million in venture, but then we more than matched that with funds from the government of Alberta as well as the federal government. And that's been absolutely critical for us because, I mean, Kelly and I were talking about the cost of doing these things. It takes time and it takes a lot of money to get a new hydrogen plant up and running. It's not like, you know, putting an app out the door. So, getting the small scale projects out, like our pilot plant, we've been able to get sufficient funding. It's 200 kilograms per day. Beyond that and longer term, it's challenging. You have to stack these programs and try to make them work together to really grow and scale. So I think that if there were longer term, longer view funding projects, that could be helpful. At the same time, if we're talking about creating a viable company, that's not the job of the funding programs. So, we really believe that we have to come up with the lowest cost solution, right? So the company, the business, we have to be competitive with existing technology while, having, a low carbon solution. And then, so what I'm trying to say is that the government can't do everything for us. I think they're doing a great job attracting funding and interest. I mean, it's generated a lot of interest in technology development in the province. Certainly, it's a reason that we stayed here. There's certainly things that could be done in terms of longer view for earlier TRL. So, for example, Clean Fuels Fund, you need TRL 9. That's difficult to achieve. Whereas, if you were to provide longer-term funding, larger funds for lower TRL with the promise that, they're going to meet certain milestones and develop over time, I think that would help get some of these technologies off the ground and out the door.
And Rob, we touched on this a little bit, but obviously you were the first refinery in North America to co-process biofuels here, or biofeedstocks in Burnaby. In your mind, how important were government incentives around that, or the regulatory environment? And maybe you can just speak a little bit about policy in the US versus Canada in terms of broad or narrow, and how those policies, maybe restrict access to capital a little bit in Canada relative to the US.
Yeah, for sure. I was working in California 2015-ish, and I know that the oil companies in California went to the government and said, you're going to put us out of business, and the government said, good. And I know in BC, we went to the government and we said, hey, we've got some creative things that we think we can do to meet these regulations that you've said, and the government said, how do we work with you? And it was so completely different. And so I think the design of the regulations in BC and that style of regulation, that's the same as California, and now we're seeing it in the clean fuel regulation across Canada. So it's a good design of regulation. It allows for flexibility. It creates a carbon market that's regulated. But then at the same time in BC that we've not seen in other jurisdictions is an incentive program that's I think unmatched. And we haven't seen that on the Canadian side at all. But the support from the provincial government was huge for moving our projects forward, and for sure why we moved quickly and why we were able to say, hey, these regulations are achievable, and then support the regulation. I think that's the worst thing, is the government comes up with something aggressive and everybody sits back and then it fails, and then what have you done? So the partnership in BC, I think, was we haven't seen that anywhere else, working with federal funding like what we've seen in BC.
Kelly, we're on policy duration here a little bit. And obviously, if you're going to go invest in 10-year plus life projects, you need policies that are going to continue to align with that capital being deployed, where people can earn rates of return. In your mind, it could be provincial policies or it could be federal policies. We're obviously moving into an election cycle here. Are the federal policies long enough in duration with election cycles that you can make these kinds of 10-plus year decisions?
Yeah, I mean, I think that's particularly difficult right now in Canada. For example, we spent 5+ years preparing for the clean fuel regulation. This is the most complex regulation our industry has seen. And then 6 months into that regulation, which requires planning over a multi-year time frame, we're now faced with how do we mitigate our risk against that regulation going away? So I would say certainly at a federal level, it can be very challenging to invest in projects when you have like a 2 to 5 year time horizon in some cases. And there are exceptions. I think when you look at small incremental changes, energy efficiency projects, or potentially even projects like co-processing that leverage existing infrastructure, you can make small investments, but where we struggle is when we're talking about large-scale deployments, especially first-of-a-kind and second-of-a-kind projects. Rob talked about BC's landscape for development, and I think provincial policies are very important in Canada in particular because of that bipartisan nature of climate policy at the federal level. And so Alberta is another really good example of a place where we've had relatively stable carbon policy over the last, since 2007 anyways. Through change of government, we've had that policy certainty, and we've also had funding support through a variety of programs for projects at a whole range of different scales and TRLs. And so I think provincial policies are essential right now in a world where we can't rely on that certainty at the federal level.
So Nico, picking up on, obviously you've got the $2 billion project with Dow. You know, where do you see future projects decarbonizing heavy industries, and is there more in Canada to be done for Linde, or given our feedstock advantage, how do you see sort of clean hydrogen or ammonia being exported out of our country? Is that a viable alternative today, or what will it take?
Yeah, maybe I'll talk about the opportunities first and then cover export. So we globally as a company, we track roughly 250 clean energy projects worldwide, and I think they have a probability weighted capex of roughly 10 billion. And if you look deeper into it, I think the areas where we see the most projects are in industrial use cases, right? And there, I think, specifically in refining, chemicals, and steel. And I would say that this is pretty representative for Canada as well. I think if you ask me which industries are going to, decarbonize or need clean hydrogen going forward, obviously we have a huge asset base in terms of refining. They need to decarbonize in Canada, whether they go with clean hydrogen or something else. I mean, that remains to be seen, but I think refining is definitely something. We have, Pathway Alliance here. I think the oil sands, they are decarbonizing. You have a chemical company like Dow, but also some steel companies, which we're looking into. They need to decarbonize their operations as well. So I think overall, Canada is not necessarily different in terms of industries if you compare Canada with the global landscape. But talking again about the advantages, right? So you have the favorable incentive scheme. America has that as well. You have like a good infrastructure, right? So you have existing CO2 pipelines to store and to store carbon, which is favorable. And that makes Canada, and the natural gas price, right? And that makes Canada pretty competitive on a global scale then we can talk about export of energy. And I'll focus on more on the West Coast and about ammonia. So to export energy or hydrogen, you need to crack that into ammonia, put it on a ship, and then potentially sail it to Asia. And I think based on the advantages like the incentives and the low natural gas price, Canada is pretty competitive on a global comparison. And if you, for example, take the US Gulf Coast, right now a ton of ammonia costs roughly $550 to $600, and I think those are prices which we can achieve in Canada as well. The advantage which we have in Canada is that we don't need to go through the Panama Canal, which is a significant issue for shipments out of the US right now. And that makes our sail time for a round trip actually only 50% of the time which you require to ship something from the US Gulf Coast to Japan, for example, right? So it roughly takes 30 days from Canada, from Port St. Rupert in BC, or Prince Rupert to Japan, and 60 days from the US Gulf Coast. And it costs $110 per ton from the US Gulf Coast versus roughly $40 per ton from Canada. The biggest issue, however, that sounds all good. The biggest issue, however, is the ammonia or the hydrogen is being produced in Alberta, and it needs to come and needs to be transported to British Columbia. And for that, you need to have a rail service of unit trains running daily back and forth. And you're transporting ammonia, which is a dangerous goods. The problem is that private companies being involved in that, they cannot take that risk on them completely. So we need the government to step in. We need the government to identify companies wanting to rail that. So I think, yes, the export of energy from Canada can be competitive, but we need a government to basically indemnify companies and help companies to make that happen, and then it can work.
Erin, clearly you're focused on distributed hydrogen. Since you've started this process of building your pilot plant, I won't call it adoption, but has your phone been ringing for these types of projects? And are others pursuing this strategy, or are you kind of a unique company at this point in time?
I mean, I like to think we're unique in terms of the technology, but there has been considerable interest. As Nico was just mentioning, transporting ammonia or hydrogen is extraordinarily costly, right? And so, you know, from the moment we had the concept, and I think, you know, I'd like to think that our CEO, Andrew Gillis, invented the term distributed hydrogen. Certainly, I think he was speaking about it earlier than a lot of other folks. People have saying, when can we have a plant? Can you build us a plant yesterday? Because people are paying through the nose for hydrogen on site. For a lot of these demonstration projects, like for example, we work with a company out of Edmonton that is doing dual fuel blending into diesel trucks, and so they're paying they're paying orders of magnitude higher for that hydrogen on a per kilogram basis than we think that we can produce it for, which we are targeting to be on par or less than industrial gray hydrogen. So, you know, the market will speak for itself. We're looking to have commercial product on the market next year for small scale plants. But certainly there's been a ton of interest, and because of that, there have been a lot of other folks in methane pyrolysis, which, you know, turquoise hydrogen, we try to get away from the colors, but basically making hydrogen from natural gas along with solid carbon instead of CO2, as well as in the green hydrogen space with electrolyzers. A lot of different companies focused on this either modular or distributed model, because right now the majority of the costs in getting hydrogen to site are in the transportation. So, you know, long-term viability of the business model, time will tell. A lot of the projected growth is in these new use cases for hydrogen around long-haul transportation and decarbonizing particular industries, and that's where we see a really good fit for this distributed model. So, you know, time will tell, but right now it looks very promising.
Rob, you know, obviously you were the first to co-process. What do you think it's going to take for Parkland to think about expansion into more products?
Oh, that's the base plan right now, is to keep going. I think when you're looking at the regs in BC, if you want to stay in the market, if you want to stay relevant, you have to keep moving in that direction. So for us, it's continuous growth, at least for the next 10 years. I guess the big problem is, like, eventually when there's no crude in the refinery anymore, I don't know what to call it because it's not co-processing anymore. So that's like the biggest problem right now. But yeah, so that's our plan, is just to keep growing capacity. So we just did another debottlenecking project and bumped capacity a bit more. So keep growing capacity, and then the other big one is to work with partners and bring in new feedstocks. So we try to find other companies who have a cool idea to turn some waste product into another biocrude. And we've built facilities to bring in small volumes so they don't have to scale up, so they can prove commercial viability. So we have a ton of partners that we're working with that. Bringing in small volumes from pulp mills, a struggling industry in BC. So develop both volume, capacity, and then also a variety of feedstocks too, and look for the next one. Yeah.
When you think about markets, BC has been the market. Parkland obviously has operations across North America, down in the Caribbean. Is BC the only market where we're thinking?
You're talking products now, right? Yeah. So the regulations create the market opportunity, I think. We have not seen customer uptake. Some of the BC, the former Crown corporations who can make significant ESG type commitments looking for decarbonization, like they'll step forward. Or we see companies where fuel is a small part, like a big name in film production in Vancouver, where the fuel is not really a big part of the cost. So they'll make big claims and look for renewable fuels. But for the most part, we're not seeing the customer pull, or the customer pull is there but at equivalent price to the conventional fuel, which is not possible.
Right.
So it's really the regs saying, hey, if you're a fuel company and you want to sell fuel in this market, you have to comply with these regs that are driving the biofuels.
And maybe Kelly, sort of last question here. Obviously, Suncor's gone through tremendous change here in the last 2 years since Rich became CEO, with a focus on profitability, returns. All that being said, you've got a large hydrogen business. You've got this SAF joint venture with LanzaJet. Where to from here? Like, where do those things fit longer term for Suncor?
Yeah, I think it's interesting. We've all talked about it. Low carbon molecules are expensive, and we do want to scale these things over time. Customer demand is important. Either customers need to be willing to pay a premium for low carbon products, or we need a regulatory regime or incentives that support their growth in a material way. And so we are part of the ecosystem. We're participating in a number of hydrogen projects. We have our SAF involvement through LanzaJet. But I think the big question is pace. And we've looked at a whole range of opportunities in this space over the last 3 to 4 years. And yes, Rich Kruger came in and he did focus the company in on some specific objectives over the short term. However, the other reality is that when we looked at all of these low carbon projects, it's a challenge to make the economics work in Canada right now. So by participating in that ecosystem in a range of different ways, we can be positioned when it is time to scale up to do so. But the biggest challenge right now is that it's difficult to scale economically, and we have a very uncertain political environment in Canada. So positioned, I would say, and waiting for the right time to scale up at pace.
Feels like waiting for the right market signal, but scaling low carbon molecules will take time. Yep. Right, Erin?
It does. We were talking before the panel that at Aurora we're going as fast as we absolutely can, but the reality is we're not making software in our garage and able to turn it over and an imperfect product before it's ready. It takes a lot of time, especially to get to the scale that the Suncor would be interested in, for example, right? So there is the reality check for how long it takes and how much it costs.
And I think it's interesting because it's technological developments, it's like manufacturing scale up, it's customer demand, it's policies, it's markets. There's so many things that go into a transition at scale that just do take time.
Well, thank you all for participating in this panel. I think we've got a couple-minute break here, and then we're going to have private equity's role in the growth of the energy transition. So thank you so much.